Good morning, everybody. This is Ezra, the RM King Trader, and then I'm making this video basically because of the demand of those in our community group, the demand to understand what demand and supply is, and what other block is, how to recognize them in the market, and how to determine whether they are valid or they are not. Now, quickly before I proceed, try to subscribe to the channel, click the notification bell, and then like the videos. All right. If you don't know what key levels are in the market, I will drop the description to the video in the description box. Try to check them out. I think that's that about this. There are a lot of videos in the channels too that might help you. You can go through them. You get values from them. All right. The link to our community channel too will be attached to the description box. So try as much as possible to join us in our community group. It will help you develop and it will help you make money. All right. The video that was demanded was that I should talk on demand and supply zones, and then in relation with other blocks. So I'm going to be talking about them briefly, and I'm going to be showing us from the chart. I don't want the video to be long, so I'm just going to show us briefly from the chart, and then we go. Now, demand zone. What are demand zones? Demand zones are basically areas in the market that are looking for buy opportunities. Areas in the market where you are looking for buy opportunities. Demand zone are always below the current price level. They are always below the current price level. The same as supply. Supply zones are areas where you are looking for sell opportunities. Sell opportunities. Areas where you want to sell the market, and then that zone is always above the current price level. They're always above the current price level. All right. Bearing that in mind, you also have to check for structure, because structure will help you, identify properly the demand zones that are and supply zones that are available in the market, and which one you're supposed to take advantage of. Now, first of all, this is the diagram I've drawn on my screen. I believe everybody can see it. That's the diagram on my screen. I don't know why it's running around away. All right. Now, this is a typical cell structure. It's not always this crystal clear on the chart, but you should be able to mark structure. This is the last low. All right. This is a high. Being able to mark structure will help you very fine. So this is the last high. This high was valid because it was responsible for breaking the last low. Very simple. So it's a valid high because it broke through the last low that I marked there. So creating this new low here. So this is another low that has been broken, but then you just need to just first mark your structure. Marking this is what some persons call range of the market, range high, range low, range high, range low. So for me, I call it just basically highs and lows in the market. Yeah, so that's what I can see from the market. Now, one thing you also need to know about this is that, since this is a sell trend, trends are always characterized by two major things. We have the impulsive move, the retracement, impulsive move, retracement, impulsive, retracement, impulsive. The impulsive move leg is always longer than the retracement. It's always like that, always longer than the retracement. When you see this, you should know that price, this kind of movement in the market, you should know that price is having a sell structure. All right, so this is what I have. Now, how do I identify my demand zones? How do I identify my supply zones? How do I, pick which of them I should use? All right, let me also draw a typical buy structure so that we'll be able to follow this. This is the impulsive move then the retracement to the downside. All right, so this is another impulsive move to the upside, breaking that last high. Then we have another retracement. Price will always retrace, it will always retrace. So we have another retracement, then we have a break to the upside, like that. Just basically this kind of moves. The leg might not, be equal distanced, but then these moves are typical in the market. So when you see this, you should know that price is buying, creating a series of highs, low, higher highs, higher low, higher highs, higher low, higher highs. This is higher high because it's higher than this. This is higher high because it's higher than this. This is higher low because it's higher than this low. So that's just a simple analogy behind this. And this is the impulsive leg, the retracement leg, impulsive leg, retracement leg, and like that. So that's just what structure is basically all about. For me, people we all have different way of interpreting the market. This is what I interpret as structure for me. All right. That I was broken, creating this low. Then this low was responsible for breaking up the previous high to create a new high. So this is another high. So this is another high. All right. Let me draw it very well. All right. So now this high also was responsible for creating a low that broke that last high. So this is a low here. It's a valid low because it broke the last high, the last valid high here. So that's a low and then a high. Creating a new high make it a valid low. So all right, so that's the last idea. So when you see this, you should know that price is buying. Very important. Very, very important. Now, secondly, there are places to look for entries in the market. You see, for me, this impulsive leg started from somewhere. Yeah. As soon as you are able to recognize where the impulsive leg starts from, then you can be able to mark a good, this demand zone. This one is having a supply zone because it's a sell. This one has a demand zone because it's a buy. All right. Now, what I would do is I will look for where the move started from. The move started from here. I will check the candle prints. Okay, how did the candle prints around here till it gets to this place? All right. There are certain candles that form the move. I will show us on the read chart. Let's say there is a bearish candle before the impulsive leg. That's what people call the OB majorly. So you pick that the last bearish candle here before the Sorry, please. I think I'm back. Can you hear me, please? All right. Thank you. Let me share my screen. All right. Okay. All right. So we are back. We are back. We are back. Sorry about that. I think it's the network. Okay. So basically, like I was saying, people are asking for the difference between demand and supply zones and then order blocks. The fact is they are not different. For me, they are no difference. People might have a lot of differences to them. I don't have any difference to them because each of them are areas in the market where you either look for buy or you look for sell. So I think we call order block, we classify them into two. We have a bullish order block, we have a bearish order block. We have our other ones as demand, which is for bullish move, and then supply, which is for bearish move. Very simple. I don't think there's any difference. Some persons might have differences, but for me, I don't see any difference there. If I mark my order block, I can call it demand zone, I can call it supply zone. I think that is clear. So this is what I look for in the market. I look for areas for price to come back and then continue its original move. So this is a typical structure, a buy structure, which is here. Sorry. Okay. Buy structure. Buy structure. Oh, buy structure. Okay. Buy structure, and then we have a sell structure. Very important. So we have a sell structure. The other one is a sell structure. This is a sell structure. Sell structure. Sorry, I don't know. All right. Sell structure. The network this morning is somehow, so just bear with me. Sell structure. So that's what I have on this. So sell, buy, sell, buy. All right. I haven't heard all this. I think we should just go directly to the chart. The fact that they're asking me which of them is valid. I'm going to show you things I actually check for when I see a demand zone, a supply zone, or basically a bearish order block, a bullish order block. All right. So thank you. All right. Let's start with this. Now this structure is a sell. Let me delete this. Most people, check a lot of histories. Let's mark the highs. We have this high. I want to really mark this. We have this high here. And then we have this low. Just being able to mark your structure is very, very important. Now, this low, typically a lot of people sometimes ask me, why did I pick that place? I always use the wick of my candle. I don't use the body. Some people use the body, but I use the wick. Maybe because of, I don't know, just my own personal stuff. But I'm not saying that the body also does not work. The body also does work. So that is that. That's my high and then my low. So this is the range of this market currently. Now, what you look for is zones first. Within that range, those are the zones you need to look at. So now I can see this candle. This is a valid supply zone. The one above is also a valid supply zone. Now, first of all, before you decide that that is valid, it must be around your premium level. Well, my Fibonacci stuff only have 50% above, so you should be able to confirm this using your fib. Go to your fib and then pick your fib, check whether they are above 50 level. If they are above 50 level, then it can hold. Yeah, perfect is above 50 level. So this demand zone, this supply zone here and the one here, both are above 50% fib level. So that means both of them are premium zone where you can sell from. I believe that's clear. Yeah, that should be clear. Now, so this is a premium level and is a good supply zone. Price reacted of it. Now, this becomes a high. This is a high. I want you to really follow the price movement, to see better. Now, this is a high. Then it created this low. Now, we're still going to scale down to lower time frame to check few other things, creating this low. See this low here. Come in. All right. It created that low. This was this candle here. This candle here is a good supply zone. This is where I'll be targeting before this move happened. So I was expecting price to come here, but price refused to come. So as soon as price refused to come, I will continue marking my structure, my market range. So this is another high. Very important. Creating this low here. Don't forget this is daily time frame. So it created this low. Created this low here. And then I was looking at price coming back to this zone. This is a supply. Now, follow me. Wow. No, I missed something here. I'll go back to it. So This was a supply zone. Price never touched it. Now, okay, before we even go, this is another supply zone here. Now, what we would have done is confirm whether this other supply zone, the one below here, this one here, is around our premium level. So what I will do is I'll place my fib from this high to the low. What makes it valid is above. Now, there are a lot of things that make another block valid. But first of all, you must confirm that other block or that demand or supply zone is above 50%. Now, this is above 50% or is around 50%. Yeah, there are good tendencies that it might hold. There are tendencies that it might not hold. I'm not talking about entry today. I'm just talking about basic demand zones and supply zones. So that's how to confirm all these things. Now, you can continue on and on and on. Like this is another high here. Now, okay, this is the high here. This one is a high responsible for creating this low. Mark your range, guys. Mark your range. First thing to do when you check the market is to mark your market range. So I saw this. Okay, I quickly mark my my supply zone for sell continuation, which is here. So this is where I'm expecting price to come to, and then I will wait for some sort of confirmation on lower time frame before I start selling down. So price is here, and then we are watching. Now, what makes these supply zones, what makes them valid? Why am I marking them? I've told you the first thing is that most of them are at my premium level, above 50% fib levels. The second thing that makes them, special is that they have fair value gap. Now, you should always bear in mind that price draw towards two things. It draws towards liquidity and then fair value gap. Those are the two things price draw towards. So price seeks to fill fair value gaps, that's FVG, imbalances, IPA, insufficient price actions. Those are where price look for to fill, and then price look for to clear liquidity. So price is either clearing internal liquidity or is clearing external liquidity. Those are the basic ones I use, either clearing internal or clearing external. So now remember, price had this fair value gap here. We were expecting price to come and feed the fair value gap into this other block, but price didn't do that. Now, price did some sort of dynamic liquidity here. I don't know whether I recorded a video on that, but I don't know. I'm not sure whether I have a video on dynamic liquidity on this channel, but then maybe one of these days I'm going to attend to that. So this was a dynamic liquidity. Some persons, trend line traders are saying, okay, first touch, second touch, third touch, which it responded. Any strategy can work in this industry. They can be profitable if you know the rules guiding them. I'm not against any strategy you're using. I don't care what you do. But then this is how I see my market. You understand? I will not talk against anybody's strategy. So if it works for you, fine. If it doesn't work for you, find something that works. The major goal in this market is that everybody is profitable. Very simple. No one is doing the contest of my strategy is the best. My strategy is the best. Yours is bad. Yours is not consistent. I don't care. Make this money. That's all. So now I'm waiting for price to come here and give me some sort of confirmation before I sell. All these that I marked are good supply zones. They are very awesome supply zones. And this is why I'm using them. Now, I've used this Crash 1000. I've dealt with supply zones. Now, let me use Crash 500 as an example to deal with demand zones, because I'm currently on a trade on this Crash 500, you see, as it's moving. So you can actually see the chart very well marked up. I had this few days back. I think I've been in this trade for about 3 days. Today is the third day in this trade, so I'm expecting it to go well high. So I don't know, but that's what I see. So some persons and might not see the same thing, but this is what I see from the chart. Now let's quickly go through the chart. This is 24 hours. First of all, I told us we should learn to mark what? Our structure. Learn to mark your structure so that you can be able to get a proper zone, demand or supply zones, order blocks, all of them are like. So for you to be able to get that, you need to find a way to mark your zones. Now, what I can see from the this area is that price cleared this high. I want you to really follow this. Maybe I can zoom in a little bit so that you can see, but let me draw this line first. All right, so let me zoom in so that I can get the idea behind this. Now, you see, I'm on a normal ground, I wouldn't, I wouldn't mark this on this time frame. I'll mark it on H4 basically. But then I just want to show you few things. Now, this has been cleared, which is a good BOS. Let me put it before, so that we can understand where we are coming from. BOS. Thank you. All right. So this is a proper BOS. Now, we have a lot of people are looking at a lot of things. I'm not talking about mitigation candle. Well, I don't really talk about that much. But then I can see this supplies. No, sorry, this demand zone. Sorry. I can see this demand zone. I want you to be able to see very clearly. Now, this candle is a demand zone. Now, a lot of persons will say it has been mitigated. It has been mitigated, but I still really feel comfortable using this. Basically, I feel comfortable using this one than using this candle here that has this fair value gap. So I will still use this completely, all the candle. I use it plus the wick, everything. I use it plus the wick. That's how I trade my stuff. So now, when I saw this BOS and I saw a retracement about the occur, and that retracement touched my demand zone, so I had an entry here. Very important. Now, price continue breaking structure. You need to keep marking your structure to be able to know where your next demand zone is. So price broke structure there. Very importantly, now where is my next demand zone? My next demand zone is here. Very important. The last bearish candle before the impulsive move to the upside. A lot of people might be thinking that, okay, this has been mitigated. There's no there is no fair value gap for price to come and clear liquidity. But I think I took this trade long time ago. I just kept buying this instrument. I bought from here. Let me show you something on H4 so that you will be able to relax a bit and then understand this better. All right. Now you would notice that on H1 that was just a single candle. To tell you the fact, the mark zone is just a single candle. You will notice that on this time frame is a lot of consolidations around this market. So for certain reasons, this was the last imbalance that was here. Yeah, the last imbalance that everybody will be looking at is here. And then you see price has tested it long time ago. Price tested it here and has bought where people that trading balance would have made money off this. You understand? And then they will start targeting another imbalance, around here. Everything works in the market. You don't need to disturb yourself and start, giving yourself headache. Just pick one and then allow the rest. You understand? So I trade basically zones. I don't trade much of imbalance. Imbalance are just added confluence to my, reasons of taking trades from wherever I'm taking it from. So now this is what you can see on this time frame. But then it was okay. It was okay on higher time frame. A single candle. The only thing that was lacking is inefficiency, imbalances. And then you see price came, tap into it. Even after all this move, it came back, tap into it, and continue buying. Now, I don't want to do much of stock. I just want you to be able to mark your demand zone and make sure that your zones are always marked on higher time frame. Try as much as possible to mark from higher time frame. Mark your zones on higher time frame. Mark them on higher time frame. It's better and more valid. I just said that it's better and more, reliable. Anyway, let me say more reliable. All right, so this is what I can see on this. I say it came back here and retested and then it shoot up. So now breaking structure consistently on daily time frame without giving a proper return to our demand zone. There are a lot of demand zones here. So this is the zone I will first consider. Like I said before, put your fib to know whether those zones are at premium level. So let me use my fib from this low. This was the last low to this high that was created. All right. So this is below 50%. So it's somewhere I can really, rely on and then trade from. So this would have been my entry point, and then, or this place below here, this last one here. Let me move this, or this one here. Although this is more valid for me, this is the place I will be considering. So first, so this is where I'll be considering when I see lower time frame confirmation around there, which is break of structure and retest. Basically, people call it plenty names, reaccumulation, redistribution, and others. Well, I don't really have much name to call anything, but then this is what I do. So when price comes here, I'm okay. But price didn't show up there. So what price did was price continue impulsively, kept breaking structure. You see, it's not wrong. Don't just push the market. You will just leave this. For me, I will leave this. Although there are other, ways that I would have entered this trade very well, very well. But then this is, I'm basically talking about demand and supply. So this is a good demand zone. This is also a good demand zone that was not tapped. I still marked it because I know that somehow price might still come there and react to it. Now, price kept up. This is another break of structure here. Sorry, this high was also broken. Boom, to the upside. And then this was a valid demand zone, this candle here. Although the candle above was also a valid demand zone, but it has imbalance below it. So it becomes liquidity. It has imbalance below it, it becomes liquidity. So price had to come and fill this imbalance before shooting up. Price came into the demand zone and then started flying. So price, just this alone is enough confidence. Except if you have low equity, you can, wait for lower time frame confirmation before you take your trades. But here, wow, this is amazing. On daily, this is wide. But price always tap into the demand zone. Somehow, if it doesn't tap into it, just leave it. So price came into it and then boom, bought up. So breaking this high, most of the people disregard that price broke this high. Forget, I'm not using, I told you I use the week of the candle. So you understand why when you start having your own personal experience, but I encourage most of my students to use the week. Those that did not use the week, I didn't tell them that they are not doing the right thing. I didn't say nothing like that. If it works for them, it's fine. So this broke this high here on daily, and price it traced down, giving us this demand zone. This other block here is a good demand zone. This is liquidity, trend line liquidity. First touch, second touch, and blah, 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 blah. So price just took everybody buying here. It took them out and then came back to our demand zone. Don't worry how I find this, but then I will show you on lower time frame how I took this trade. Now, this was a good and valid demand zone, and price reacted of it. Okay, so I went to M15 basically. When price got here, I went to M15. If you are in the if you join the community, you see it is there. The way I took the trade. All right. Okay, it's even the markup is even here. All right, the markup is even here. So as you can see, this was a BOS on 15 minutes. This is a mitigation block. It's also another block. Anyway, you can call it whatever name you want to call it, but it's a mitigation block. I will explain that in maybe one of the videos. Price broke structure. This is another zone. This is a good demand zone, basically. On this M15, this was a good demand zone, basically, to enter from. So price broke higher. And then as soon as price retested this demand zone, this thing has shifted. Because this is where I entered the trade. So as soon as price all right. So as soon as price tested this place, I took the trade. My stop loss was below here. So I took the trade here, stop loss below here, and then since then it has been buying. Good massive buy. No joke, no joke. It's just the stuff. This should have given, I'm coming, let me use something different again to mark that up. All right. I want to see how many risk to reward I have got here. All right, so this would have given good amount of, good risk to reward. Yeah, I guess this is 1 to 9, which is okay. It's fine. So you should just know how to do this. So this 1 to 9. I think the old trade here is supposed to give 1 to 78, I guess. 1 to 78 is what I'm supposed to get from this trade. So this is how I trade. This is how I mark my demand zone, mark my supply zone. What makes a demand zone valid? You cannot tell whether a demand zone will hold or it would not. Nobody can tell. Market can do whatever it wants to do, but you have to have your own head for you to take a specific demand or supply zone or order blocks specifically. Like I said before, there are no difference. All of them are areas you are looking for either to buy or sell. So that's just it. So when you see this, the first thing you should be looking at is, okay, where is my order block? Where did this move start from? You mark your order block, check whether there is imbalance there. You can scroll down to other time frames to see, okay, what the price do there. When you see that there's imbalance, wow, this is a good trade. Let me see whether price is going to give me a lower time frame confirmation on this trade. You saw a lower time frame confirmation, you should shoot. Price will do whatever it wants to do, whether you are in it or you are not in it. So just make sure you follow your confluence to the end, and you're going to see the result and the effect of it. All right, so I think I'm going to end the class here. I don't want to tell us a lot of things. We are just talking about demand and supply zones basically. So the zones below the current price level is a demand zone, and the one above current price level is what? A supply zone. Supply zones are where you look to sell the market. Demand zones are areas in the market where you look for buys in the market. All right. So I would be hoping that you join our community, which is the RMK. The link will be in the description box, and then you can like our YouTube channel. It's going to be resourceful. I'm going to be having time to post and share video lectures, maybe from now till the second week of December, if I go on a short break for 1 month and then resume back second week of January. All right. Okay, I'm going to end the class here. I hope this is resourceful, and this is just for educational purpose. That's this disclaimer on it. It's for educational purpose only, and it is not to discredit any other person's strategy, but to bring clarifications to those that are confused about their strategy. Cheers, and God bless.